Everybody, welcome to, what do I call this? A webinar, I guess, a free webinar on the Wyckoff method. And what I wanted to do, I thought it'd be good and educational to talk a little bit about the recent rally that we had and and then the subsequent pullback that we had. And I'll show you that in a minute. And then I'll talk a little bit about what I see coming up for the S&Ps. Now, if you have any questions, go ahead and ask. Type them in there's a question or a chat box, just type them in there. So I wanted to talk about these two areas here, the beginning of the rally here and up, and then the beginning of this pullback. Now, this is a couple of days old, this chart. I did this over the weekend, so it's not quite up to date. I think I have one that does have today's date on it, or today's price and volume action, today's market action. So I want to highlight something here because we're going to be talking about this area. Notice this orange line coming across. This was a support area, right? That held the market not just here, but also back here. Look at all the trading that that occurred on this. Almost a whole week, actually more than a week's worth of trading. And almost every day is touching or coming very close to that line. Same thing over here, quite a bit of trading here, not quite as much, but that's a lot of trading. And when price comes down to a key support level like that, when there's been a lot of activity. And if you think about this, this is an important level, right? This is, in Wyckoff terms, this is called the jump across the creek. And then this is a backup to the edge of the creek. All right, that's Wyckoff terms. Another way to think about this is it's a good old-fashioned breakout. I'll just abbreviate it. And then a back test of the breakout. That's what the backup to the edge of the creek is. The Wyckoff folks just used a story of a Boy Scout trying to get across a creek of supply and kind of made a little story out of it. Anyway, when price comes back to a key level like that, we anticipate that it would hold. So let's take a look and see. Again, we're going to look at this area first, and now you can see this orange line in here. That's that support level. I blew this up so we could see the price action a little bit. So let's do some tape reading here. And I did make some notes, so let me make sure I'm sticking with my notes and I often get ahead of myself, and then I'm not telling you what I wanted to tell you, and then you get kind of shortchanged, and I don't want to do that. All right, so I want to keep with my notes. So coming down into this support, what do we see? We see supply and control, right? We see a pickup in volume, a nice increase in volume to the down, and prices moving down, so it's pickup in volume to the downside. We see a wide spread or range, the distance between the high and the low. We call that the spread or the range. And it's closing firm to the downside, closing near its lows. Sellers are in control. That's pretty clear, right? Next day, day two, still pretty heavy volume, right? If we look back a couple of weeks, it's more than we've seen in a couple of weeks. So I would call that still fairly, sustained volume, still pretty heavy volume. It's a little less, right? It's a little less than the big down day that we saw on bar one, but still pretty heavy volume, or still pretty good volume. So what do we see here? Well, one thing I see is that the range narrows, and we're not breaking resistance anymore, or support, excuse me. We're not breaking support. That support turns into resistance, and now it's holding. I'm talking about this level here, which actually goes all the way back into here, around 5,800. Now, that turns out to serve as resistance. So that's still pretty negative. But then down here, look at what happens. we don't continue to go down lower. We don't break the support. Instead, we stop at that support. And in fact, we close off of the lows. We close closer to the middle of the bar than the bottom of the bar. Well, that signifies only one thing. Buyers stepped in. You know, it has to be. Sellers aren't going to bring it back up into the middle of the bar. It has to be buyers, right? So we have the presence of buyers starting to step in here on bar 2, possible buying coming in. And then the third day, look at this, even more narrow in the range. We do dip underneath, it might be hard to see because of this orange line, but we do dip underneath the lows of the prior 2 bars. We have low volume now, less than the prior couple of bars here. So suddenly the volume is dried up, and we push down underneath, but there's not enough fuel to drive the market down. Sellers don't they don't capitalize on this, right? We know that because they didn't take it underneath the 2 lows there from yesterday. So that kind of is setting us up for a potential rally, maybe back up to the top of the this resistance here, the old support resistance. Maybe it gets up to 58.30 here, this pink level. You know, this is a lot of supply that came in. Getting over the top of that bar was significant, which happened a couple of days later. All right, so this is the daily chart, and this gives us, for day traders, this gives us a nice indication, right? A preliminary look here. Still kind of crude though, so we want to go a little deeper. Buying the Weiss wave, does the DV come with David with that? He doesn't have a DVD with that, so I don't think there's a DVD on the that is sold with the Weiss wave. We don't sell it any longer. You would have to buy that directly from Karen at Weiss on Wyckoff. I can give you the link if you want a little bit later, but let's stick with the charts here. So I like to drill down into the next level down, which is a 4-hour chart or a 240-minute chart. And these are the same days here, days 1, 2, and 3. So on day 1, you can see that we broke out of this trading range here, right? This congestion, broke to the downside, sustained volume all the way down, wide spreads, closing poorly. Sellers, as we said on the daily, were in control. And when we look at this on the 240, very clear. Supply is in control here. Next day, buying, a little bit of buying comes in. You can see the resistance here around 5,800, and supply comes back in with that resistance. Interestingly, though, the next day, we're seeing the volume drop off as we did on the daily. But look at what happens. Starting in the Asian session, we see buying coming in as the price dips down into down towards 57.30 area, 57.25 area. Buying starts to come in. And it's hard to say whether that's very significant. It's the Asian session, right? But then in the European session, we're seeing it, and through the American session, look at this. Still pretty less volume, but not small compared to, you know, the stuff we were seeing up in here in the trading range. And it's closing firm. So sellers were in control. There's a transition here where buyers are starting to wrest control, and that transition is continuing on here. And buyers get into control have control the next day. But you see the transition that goes here, all right? So let's take a look at how this might have been traded. Here's a 15-minute chart of this day. And this was the low of the day, put in just around 11:30 or so. I forget the exact time. but this is the prior to Friday's low here, 2 days earlier. So we flush underneath of it and then close back on top of it, right? This is what's called a spring. And it's a classic, those folks who play in the Wyckoff, who play the Wyckoff playbook, the springs are bread and butter trade. And what happens with a spring is generally we're coming down and then we have a rally and we come back down and we revisit those lows. Let's call those lows here at A. We rally up to B. Whoops, getting ahead of myself. B. And then we come back down. We penetrate at C. We penetrate underneath A, right? The lows that were put in. But we can't hold that penetration. We can't, sellers aren't able to continue to follow through. And price bobs back up here and closes back above the low put in at A. And when this is a daily chart, when A is a daily low, as we're going to see here, which it is, then it becomes even more significant. Okay, so this is a spring of a daily. Then a little bit later in the evening, around this looks like around 8:30 at night Eastern time, right? Just beginning into the Asian session. What happens here? We test this spring. We're testing the heavy volume that came in here, and then the volume on the rise. We're testing to see if that either the spreads are the same or the volume is the same, and it's not. It's much, much less. And notice that this test is also a spring. Isn't that cool? We often see this. We make that low, so this would be A. We have a little rally up into B, and then we come down to C to revisit A. We try to go underneath the lows at A and start to, but we can't follow through there. And so if you were trading that night, either of these are good spots for buy opportunities. And then the next day, right at the American Open, right just before the American session opens, we get another spring. Here's the A level, the B, and the C, right? And not only that, we're behind a spring that got tested here, and now we're making higher lows all the way up here. Very bullish. It's basing up above and basing, accumulating really is what's going on in here. And you can see that the supports or the lows here are lifting. It's a nice bullish sign, okay? And as I said before, this is a spring of the daily. So here's a crunch down chart here. Here's the spring. Here's the second spring, that was the test. I didn't highlight this in here, but this is where the spring was in the American session. And this spring here is springing last Thursday and Monday's lows, okay? So this is the A here. We rally up to B. This is much larger, right, than some of these smaller ones that we talked about. And then we come back down here at C. And often when there's a lot of volume, we will get a test. That's very common. And so you can see that this was a nice little trade here, excuse me, that's set up. Now, this is the overnight session and the next day's session. Look at what happens here. What do we see here? Well, we have our A and B and C, right? And we have our A and B and C, and we even have our A, our B, and our C, and here we get a test. Now let's go, I'll go through each of these in a little more detail. But we're going to take a look at this one on the 5-minute. I won't do that with these two. You can do that for yourselves because this is a 15-minute chart, and I would encourage you to. You don't have to. You can see it well enough on the 15, but you can get maybe sometimes get a better entry on a 5-minute chart. Look at why these are good springs. We are breaking resistance, and we're doing so on widespread, good solid move up, volume coming into the upside, breaking resistance, moving up, good wide spreads, good, even better than before, more volume coming in. This is the environment we want to see for a spring. Okay, this is exactly the environment that springs work best in. Okay, now we come into the American session, into the early part of the American session, and supply comes in. Oh my goodness, what's going on? This is a shakeout, really, is what this is, of trying to get rid of some of the premature buyers, trying to get their contracts, really. Let's go to the 5-minute chart and take a look at this, because this is useful. So this is just that area. I'm not looking at the whole area in here, but we have a low that's put in at this point, and we have another low here. That is the spring low, where you could see this either as A and B and C, or as A and B and C. Both are valid. Okay? Either one, it doesn't really matter. But we come down and we push up. Notice the nice response. Wow, look at that. And not surprising, because we're getting good solid drives up, right? This tells you immediately that there's buying present. Now, this is I like to use on a 5-minute chart, I like to use standard volume, that's this panel, but I also like to use the Weiss wave. And the Weiss wave simply aggregates the volume on each swing or each wave. And you can see they change colors here. So here's a red wave down, and you can see that's the volume for that. This is a little bit bigger wave down, that's the volume here. Now we come up, this is the volume coming in. Look at how much volume. It's really helpful to see volume in terms of waves rather than in terms of standard price bars. Because here it looks like the volume's diminishing. It doesn't really stand out for us, right? Looking at the Weiss wave, suddenly I have this notation here, D over S. This signifies that demand is overcoming supply. Why? Because this is bigger than anything we see on the chart. So we have a lot of demand volume coming in. We have a nice strong rally up. The price bars are widespread, closing firm. We are holding support. We are breaking resistance. All of those reasons suggest that the buyers are very active in here. So when it, excuse me, when price comes back down a little later, around 11 o'clock, plenty of opportunity to get in here. We'd be reading these price bars here. This one has a little bit of volume to it, closing off of the lows though, closing in the middle. Then we get this other one here, slightly narrow range, less volume, and closing in the middle. That's a good, and we're in the middle of high volume over here. So this is testing that volume, that high volume. And so there's a buy, or I'll erase this so we can see a little bit better. We push back up and retest the lows at this level A, and we get a key reversal, a pop off of that. That can be bought as well. So anywhere in here, you can buy it on the spring, you can buy it on the first test, you can buy it on the second test, or add to your position on those tests. Did the daily chart and 240-minute chart spring? Yes, I showed you that on the, I'll go back quickly and show that this is the 15-minute chart here, but it goes all the way back to Thursday, Friday, the whatever day this is, the 2nd, or November 1st, I guess, Monday, the 4th, and then Tuesday, the 5th, last week. So this is the spring, and it's springing these lows, these daily lows, okay? All right. For the first spring, why is it okay to buy a spring in a downtrend? Because I just walked you through tape reading the daily and the 240-minute chart, showing you that there was a transition from selling to buying. So when we go back down on the intraday, on the 15-minute, 3 or 4 days later and we flush underneath and there's no supply down there and price closes back up above the lows of Friday and Monday or Thursday and Monday, whatever those days were, that's demand coming in. So I'm happy to buy that. But we're looking at the context. We don't just take this out blindly, right? Okay, so those were the days, and you can see that we started off with a spring, a spring from the daily. There were springs on both days here to bring us into the market. And now let's talk a little bit about the pullback here that we just experienced the last couple of days. Before today, we sprung, whatever day this was, Friday's down move. Oh, but before we do, just want to just very briefly just let you know that we're having a sale, you know, the Black Friday sale and damn things. So you can take get a discount of $50 on membership. That's a monthly charge, and you get $50 off that. And then you want to use the coupon member50, and then $40% off all courses, and use this BF 2024. I don't even know what that stands for, BF. And anyway, the Black Friday, and the Black Friday sale is good through December 5th. All right, so now we're going to talk about the down move that occurred for the last few days. And one of the things that we do is, we would do this looking at the up move too, but this is where it's more appropriate for us. We're always going to look at the higher time frames. And I like to look at the monthly and the weekly. And we can see that this monthly is very high in the trend channel, has not had a pullback really since whatever it was, August last summer. The summer before last, 2023, we haven't really had a good pullback. And we're high in the trend channel, right? If we draw a demand line here and our supply line, we're not very far away. And we are at a big round number. And that becomes a little more important, as I'll talk about in just a moment. Shifting to the weekly, so the monthly is overbought up there. It's, you know, potentially we could see a pullback. Shifting to the weekly, same thing. We draw in our trend lines and stuff. This is my normal chart that I look at. And we can see that the weekly is up here, high in the trend channel, over in the overbought area. You know, anything in the top third of the or top quarter of the trend channel would be, it would, you know, you're in the overbought area, and you would expect supply to come in. So, and we also have we have multiple lines coming up in here, trend lines coming up. And usually when you have multiple lines, they're better than any one single line alone. Also, what was going through my head here this past couple of weeks was we use point and figure charts in the Wyckoff method. In fact, Wyckoff was a big proponent of point and figure, used them probably more so than he used what he called vertical line charts, what we call bar charts, bar and volume charts. This is a very sensitive one. This is based off of 60-minute high and low lows, and it's a 50 by 1. So it's just a one box reversal. You can see here that there's, and the way point and figure charts work, just in case you don't know, is you would look for areas of accumulation, and they pop out on point and figure charts, and you can calculate a projection as to how far the market will move based off of that accumulation. And a lot of times you'll see accumulation, and then we start to exceed the accumulation, as we did up here. So we had projections up to 5,500, 5,550 here. We started to exceed that. Once we do that, we look for another accumulation area. We have that. That projected up to 6,000. We've now met that, and I don't have any more accumulation areas. Okay, so there's not much more to the upside, at least from the perspective of the point and figure chart. And we're overbought on the monthly, and we're overbought up there on the weekly. Not to say that we can't go up higher again and maybe even make new all-time highs, but I doubt it's going to be very significant. We'll talk a little bit more about that in a minute, but let's get into the downdraft that occurred here, and then we'll talk a little bit about what I see on tap for the coming days. So you might notice that I have these pink or fuchsia colored bars in here. These are narrow range days of a specific type. They're the narrowest range in the last 6 days. So in other words, the last weeks of trading, last 5 bars plus this one, this is the narrowest of all. And so when that occurs at the top of a trend channel, you know, we've got a supply line in here, and we've rallied up pretty good, and we're up pretty far above support. When we start to see these narrow ranges, especially when they're associated with small volume, it signifies that demand is tired out. This is a classic no demand up in here, bar number 1. Very classic no demand, okay? Now, bar number 2, it's a down bar. We couldn't rally up any higher. We opened and came down. It did close in the middle, but we see a little pickup in volume, right? So there's some initial selling going on. Is that significant? We don't really know. It stayed at support here. The next day, bar 3, we get an attempt to rally up. And now again, we get basically the same amount of volume as 2, and we go nowhere, right? So this is what we call effort to go up. A little bit, you know, the buyers attempted to push it up, did get to close it off of the lows, but on 2 days worth of volume, made no net new progress over this. In fact, we call this clustered closes. The 2 closes are very similar here, indicating an inability to push prices higher. So at this stage, we would be saying, oh, not that we would saying, oh yeah, definitely we're going to get a pullback. No. We're never we don't predict in this game. At least we don't. Many other people do, but we think that that's nuts because no one can predict. What we do is we anticipate, and what we were anticipating is, okay, we came up here, we had no demand, a little bit of supply came in, and then buyers tried to push it up but couldn't get in anywhere. Sellers were kind of stepping on all that buying potentially. Let's take a look at the 240-minute chart and see if that does in fact make some sense. And as we look, it does. We see the no demand up in here, the light volume basically, and any volume that did come in, the red bars here, was to the downside. So this is our no demand. The next day we said was a little bit pick up in volume, and look at what happened. It comes in on the downside as well. It did close in the middle, so there was some buying, but there was enough volume in there or enough selling in there to push this down, held along this support level, this daily low in here. Then day 3, we see the heavy volume is on that bar, on this, on these 2 bars, right? The heavy volume. And on the first bar, we push up and then close in the middle. Then on the second bar, it looks like we came all the way back down again and rallied all the way back up, but couldn't really get above the high of the prior bar, and the volume doubled there. So a lot of effort to push up, not much result. Let's look at the days, the next day. So we were, not to say that we were convinced that we were going to see some selling, but the next couple, we were in a situation where we were thinking, okay, the market's vulnerable. So we would be looking for negativity to come into the market. And we sure got that in spades. Now, this is a 15-minute chart of the next day. So this is the last day of the chart. This is the high, and this is the low of that day. And then the orange is the overnight, the European and Asian high, European and Asian low. Now, notice what happens here in the Euro session. we go 6 hours, right? From 3 in the morning to 9 o'clock in the morning, 6 hours bumping against the overnight high here and unable to get over the top of it. And I see in here some pretty decent red bars, right? Pushing down, looking kind of negative. That was the first clue, you know, coming in, that's the immediate first clue. We had some 8:30 news that broke, and it broke to the downside. We come back up and try to test, and we fail in here. If you were nimble, you could have caught a move down here. But we come down and break down through the overnight low, showing supply in control. Now the American session's open. We try to rally back up. We start to hold yesterday's low. We try to rally back up, and look at what we get. Really weak in here. Volume coming in and an opportunity to go short. This is an up thrust, okay? And then what happens? We get more supply and we rally up, and we have other opportunities to get short, including, this is nice, where we have, let me erase this, resistance from old support being broken, and then the supply line of the diagonal supply line intersecting here. And this was also an up thrust. So an up thrust is the reverse of a spring. We're coming down and we make a high here at A. We'll call this A. And then we make an intervening low here. That'll be B. And then we come back up to A, go over the top of it at C, but can't hold it, and instead come right back down. That's an up thrust. It's the reverse of a spring. Springs are excellent in uptrending conditions. Up thrusts are excellent in downtrending conditions. Okay. So, and then the day after this is the next day's low, and I'll look at the 5-minute chart on this. This is the day we were just looking at, the low, where we saw the couple of up thrusts. Notice what happens here. In the overnight, we start making lower lows and lower highs, right? Indicating weakness. This is yesterday's low right here in black, and we broke through it and couldn't get over the top of it, So 8:30 news comes in, supply enters the market, and we have an opportunity to short right in here. We'll take a look at the 5-minute chart and see what that looks like for us here. So again, this is, I think this is yesterday's high up here. Might be a little higher than that. That might be slightly off. It looks off to me for some reason. In any event, here's the 8:30 news. This often happens. The news is frequently used as a catalyst for movement in the market. And here's a perfect example. We saw it the day prior too. I don't remember what the news was, maybe some sort of unemployment or CPI, maybe it was CPI. In any event, we get supply coming in, right? We know it's supply, widespread, poor close, heavy volume. Now we try to rally up. Look at the narrow ranges trying to get up over the top of that. And look at the small volume coming in here. So again, just like we were talking about the NR 6 days at the top of a daily rally, it's the same thing here. We don't classify these as NR 6s or whatever. We just notice that they're narrow range, price closes in the middle, volume's really low. That's a nice spot to go short. A little bit later, this was difficult, truthfully. We break down here, and we tried to hold for a bit. That's what created this little rally. But then we break it down, and we can see that there was a lot of trading around here. We call this an access line, where it had been resistance and then becomes support and now resistance again. It's usually stronger than like a straight line of 1 point or 2 points when you see a lot of trading around this like this. So when those lines, when these access lines set up, there's an extra level of comfort that we can have, or confidence that we can have, that they're going to hold if we're reading the market well. So as I say, this is a little difficult. This is after the market opens, and the price bars in here were kind of wide. The volume was coming down. We were at strong resistance. We do have, this is the Weiss wave now again, we do have the volume now starting to come into the downside. So this was an aggressive play, but a good one nevertheless. Let's go a little farther, because it was hard to get in this trade until we got down here. And I'll show you how this set up so nicely. First, I want to go back though to the 15-minute chart. This is that period of time on the 5-minute that I just highlighted where a nice trade set up. You know, we had one trade set up here around the news. This was around the American Open, very hard to get in this. And now we've broken down, this was a key level, a key support level, a multi-day support level that got broken. So now we're in a downdraft. And look at the narrow range bars, right? Look at how nice and wide these bars are in here, all pretty much closing poorly. And then look at these attempts to rally, right? They're narrow range, closing in the middle, or very narrow range, and the volume drops off dramatically. This is no demand, okay? Now, that's the 15-minute chart. And this is multiple time frames I'm showing you here. Let's take a look at how that's set up on the 5-minute. Again, we see the supply come in, just as we saw on the 15. As we try to rally up, we do see some pretty decent volume on the Weiss wave, no question about it. I would kind of consider this to be an attempt on that wave to push up with some demand, but just not getting anywhere. So this would be an effort to rally, and the result, not so great. We call this effort versus result. But on the standard volume, this is why I use both. Look at what happens. As we rally, the volume tapers off. It dies off, right? And also, this is a mini little up thrust. We have A here, and then B would be down in here, and then C. And then we rally up on no demand. Then we get that nice little reversal bar. There's your entry for that. And you could also pick up this additional entry here if you wanted to. Either one of these was fine. You could, or this was in addition to that, and turned into a pretty nice trade, you know, from around 59.10, give or take, down to another 20 to 30 points lower. So, and then today, I'm not going to go through this. I just want to highlight this. We get another spring, right? This is today's action, and we got a spring of what was that, Friday, I guess, right? And there it is on the daily. We come underneath here, underneath the two prior days, fail to go any lower, rally up. We don't just rally, we close above this key level here. So we're back up above support, that's positive. We're also closing above the prior day's bar, also positive. And I see volume picking up. So overall, we've got buying coming in, and I would expect some, you know, an attempt to retest the highs, maybe go up higher. Now, I have to say, again, that point and figure chart and the monthly chart, the weekly chart, all kind of pointing to maybe we're not going to get very much higher here. I don't try to make predictions about this. I just notice what's here. So if we rally up again, now if we put in a lower high, then we're probably going to see a bigger move down, right? If we rally up in here and hold in here, maybe go a little bit higher, Like if we extended this up, maybe 6150 would be the target up here, 6100 to 6150. Could certainly see the market go up there. And that's okay. You don't have to be exact on the point and figure charts. They just tell us that these are areas we want to pay attention to. Bob Evans used to use the railroad crossing analogy: stop, look, and listen at those spots, right? That's what we want to do. Just pay attention here. But there really is no more cause that I see to go up. So most likely what's going to happen is we're going to be in a trading range over the next several weeks. Maybe a little bit higher into the end of the year, and then we start going into trading range or something along those lines. But we have to build cause either to go up higher, or we have to build distribution cause to go down. We won't know which is which until it's built. But right now we don't have enough cause to do either. So that typically means that we're going to be in some sort of a trading range. And I could see us being in a trading range, a small one to start with. Maybe it expands. I mean, I have no idea, right? Maybe, so this would be one level of trading range. Maybe we stay in there and then push up. But maybe we drop down and then 5725 area all the way down to maybe 5580, 5600 down here by the time we get down here. Maybe this is the trading range in here. That would suggest maybe, well, I don't know exactly what it would suggest. Could suggest more supply, more distribution if it comes all the way down there. But this is the halfway point between the high here and the low. And there's a longer term trend channel in here, so there's support from that. So it would not, this would be a good spot for the market to stop around here, 5585 to 5600 if it comes down there. But that's a big if. All right, that's what I've got. Just one more reminder, we're having a sale on our membership. If you want to learn this stuff, here's what we do. Every week on Thursday nights, we spend an hour and a half, 90 minutes, going through, starting with the daily, then looking at the 240, and then the 15 and 5-minute charts, and we walk through, it's historic data, but we walk through looking for trades to set up, why they're good, and we make trades and talk about it, and so on and so forth. So if you ever wanted to learn tape reading, because that's all we do, we don't use any indicators except for the Weiss wave, that's it. And that's just on the 5-minute chart. Other than that, it's just price and volume. And we will show you how to read the charts, like how most professionals read it. Most pros are not using a ton of indicators. They might have a moving average or an oscillator on their chart, but they're good tape readers too. So that's our membership. We meet weekly, as I say, for an hour and a half. And then we also have some courses, and all the courses are off, 40% off. And this is, use the coupons, don't forget to do that. And it's good through December 5th. All right, I'm happy to answer any questions you all might have about this, if you have any. Wouldn't be surprised to see a larger move tomorrow. Well, yeah, I would expect, now that we've got the spring in place, buyers are back in control. They'll be really in control when they take out this high, right? This is the supply. And so I forget what the high is here, but this is, and so this is, we also call this the pocket area. There was a lot of trading up in here, so there's resistance here. There's a lot of selling that happened on this bar. So sellers will defend this. This is the key level to get over the top of. Wouldn't surprise me to see us come up into this level, back test it, come down, and then start putting in a higher low, right? That's really what you want to see in here. Most likely we're going to back test the top of this. This might be a good short. I have to look at it when we get there, but potentially a good short up in there. And then see if it holds around 59.30 or so. If it does, that's a higher low. Then I'd be looking for higher prices going up. Are you going to go through Tom Williams's book in the future? That's what Helen just suggested I do. Probably, Lynn, probably. NVIDIA earnings tomorrow night. I wouldn't be so. Oh, the NVIDIA. Yeah. So NVIDIA, you know, sometimes has acted as a catalyst. This past summer, it surely has, with good earnings and stuff. Sometimes Tesla has acted as a catalyst. But yeah, they often look for catalysts. What time do you use in the morning for the cutoff time on the overnight high and low? Yeah, so this is, so once, yeah. So the way I figure this, the way I think about it is there's the overnight, which is the Asian and European sessions. The European being the more important, but sometimes the Asian is just as important. But the reason I say the European is a little more important is because it has more volume to it. The Asian session still doesn't have a whole lot of volume most nights. Sometimes that's different. And when they do have volume, take notice of that because something's going on that you want to be aware of. In any event, the coming into the American session, I usually say the cutoff is about 7 o'clock, 7:30 in the morning. If there's a high that's put in, say at 7:45 or 7:15, and there's a more prominent high in the middle of like the beginning of the European session around 3 a.m. Eastern time, give or take, is when that opens. Then I'll just put a regular bar at the 7:15 or 7 o'clock level, and I'll put the heavier bar. You know, I'll consider the overnight high being that prominent one. All right, so that's the way to think about it. Look for the obvious, Carl, right? You know, sometimes it's not, but most of the time it will be. Look for when things stick out. You know, there's a couple of hour low or a couple of hour high. That's the one that you want to see as the overnight high and low. Good question. What are those bars marked with blue and pink? Yeah, those are just indications of narrow range days. There are two different kinds of narrow range days. This is Toby Crable's NR6 days in pink, and in blue, it's a narrow range day, not of the last 6, but of the last 4. It's not quite as stringent as the pink one. But it has one other criterion, and that is that it has to be an inside bar. So it has to be inside the prior bar. You can see this is pretty easy to see that that's inside the bar. These are a little difficult to see, but they are inside. Here's another one. It's got to be inside the bar. These are like one tick under and over. That's why they're painting blue like that. But yeah, both of those can be significant in the right setting or circumstance. It just gives me a sense of the flow of the market as well. The trading is just off of the S&Ps, yeah, the 5-minute S&Ps. I've been using 8 a.m., so it's close. Yeah, I usually think about 8 o'clock. So the American session opens at 9:30 a.m. Eastern time, right? And so I usually think of the pre-market where, you know, some of the early news happens, and you'll start to see the larger players starting to get positioned for the day. That's usually, you know, the hour and a half or so before. So I usually say 8 o'clock to 9:30 is the pre-market. Could be a little bit more than that. You know, it's just it's just an approximation there. Yeah. All right. So I hope you got something out of this, and I want to thank you all for coming in. Thank you for your attention. Hope you got some learning out of it. If you're at all interested in learning this method, come join us, you know, and check it out. It's not really that expensive, and I think you'll learn quite a bit if you're not familiar with this method. All right, everyone, thanks so much, and I'll see everybody on, we're going to have deep practice tomorrow. Tomorrow night we're going to meet. So I'll see you all tomorrow. All right, everyone, take care. Bye-bye now.